Welcome back to the Malaysia Money Matters show. It's the 30th of May, 25. Today we're doing another deep dive into the latest financial news that's shaking things up, both here in Malaysia and, globally. Our mission, as always, is to cut through the noise, look at the sources, and give you the key takeaways. Okay, let's jump right in. Malaysian company performance first.
Sounds good. Yeah, the first quarter earnings reports definitely showed a real mix. Companies are navigating a complex environment. Take Genting, for example. Their profit fell quite sharply.
Right, what was behind that?
It looks like lower revenue, but also higher taxes and a significant impairment charge, basically writing down an asset's value.
Okay, so specific hits there. But Genting Malaysia, slightly different story.
Yeah, slightly. Profit rose a bit, but
Right.
the sources say that was mostly down to forex gains, currency movements or actual revenue slipped.
Interesting. Shows how different parts of a group can diverge. What about Axiata?
They also reported weaker profit for Q1, partly anticipating some softness from a recent merger. But the big plan there seems to be asset monetization, selling off things like LinkNet and Boost.
Raising cash to cut debt. Classic move.
Exactly.
And the CPO-linked companies. Palm oil prices have been high.
Generally stronger, yes. Axiata saw profit jump fourfold. QL Resources was only slightly lower profit-wise. Both benefited from high CPO prices, though QL did flag potential risks if egg subsidies are removed.
Right, always watching those policy changes. Carlsberg, Malaysia.
Their profit was up, but apparently that was largely due to lower taxes this year compared to last. Actual sales volume and revenue were down. The timing of the festive season was mentioned as a factor.
Okay, so taxes masked a slight dip in underlying sales. IHH Healthcare. The numbers looked lower initially.
They did, but the sources clarify that's mainly accounting adjustments. Something about not having a tax credit they had last year, their core profit, the underlying business health, actually increased.
That's a key distinction. So they're managing rising costs through their sort of diversified hospital network.
Seems that way, yeah?
Okay, moving to construction and property. Chin Hin had strong results.
Very strong. Nearly doubled profit. A big boost came from their subsidiary, Signature International, plus a turnaround in their property development arm. They're boasting pretty strong order books, too, which supports that outlook.
And IJM Corp, their profit fell.
It did, but it was linked specifically to a credit loss tied to the West Coast Expressway.
A specific project issue.
Right. But like Shinhin, their core construction and industry segments are doing well. Big order book there, too. And they even landed a new joint venture in the UK.
Good to see that international expansion.
Yeah.
UEM Magenta, though, posted a loss.
A Q1 net loss, yes. But management is framing it as a temporary blip. They expect a rebound based on cost savings and efficiency improvements that are apparently already kicking in.
Okay, so mixed bag overall. Some headwinds, some strong spots.
Definitely.
Beyond earnings, Sunway Construction had some huge news, didn't they?
Massive news. Secured RM 1.16 billion in new contracts.
For data centers.
Exactly, from a U.S.-based firm. That really boosts their order book and, earnings visibility for quite a while. Data centers are still a really hot area.
Clearly. And Bursa Malaysia is making moves, too.
Yes, they're partnering up to make it easier to list foreign underlying EPFs here. The goal is to give you, the Malaysian investor, broader access to global markets directly through our exchange.
That's a positive development. More choice.
Mm-hmm.
And on the IPO front.
Artana Kenyaling's IPO ahead of its ACE market listing was well received, oversubscribed by more than 5 times.
Shows there's still investor appetite, particularly for maybe construction-related stocks.
Seems that way. And just quickly on others, PMB Technologies' profit more than doubled despite lower revenue efficiency gains there. Padini's profit rose on strong festive sales, even with cost headwinds. Tropicana reported another profitable quarter, big unbilled sales pipeline.
But not all positive.
No, Wellcall shares dipped after weaker Q2 results, hit by exports and costs. And Windstar Capital is targeting 30% growth, hoping higher Chinese aluminum prices push buyers back to local suppliers.
Okay, quite a whirlwind on the domestic front. Lots of company-specific factors, but also hints of those bigger global pressures, right?
Absolutely. And that leads us nicely into the international and political news. It's fascinating how connected everything is. For instance, economists have actually cut growth forecasts for both Malaysia and Thailand for 2025.
Yeah, and the main reason cited.
The impact of U.S. President Donald Trump's global trade war, specifically on exports. These are export-heavy economies, so trade friction really bites.
Yet, paradoxically, emerging market currencies like the ringgit are expected to stay firm. How does that work?
Well, the sources point to a weakening U.S. dollar, A weaker dollar tends to support other currencies against it.
Right. And a stronger ringgit, or at least a stable one, could help keep import costs down, maybe depress inflation a bit.
Exactly. And that could give central banks like Bank Negara maybe a bit more room to ease policy if needed, especially if exports are struggling.
So it's a complex interplay.
Yeah.
What's the U.S. Fed saying amidst all this?
Their latest meeting minutes really underline the uncertainty. Officials are staying patient on interest rates. They specifically mention risks from tariffs clouding the economic outlook, affecting both growth and inflation potentially. Fed staff even saw recession risks rising.
Wow. Okay, tariffs are clearly a major concern. And speaking of tariffs, there was a huge development just today, wasn't there?
Yes, a really significant one. A U.S. trade court actually blocked President Trump's blanket tariffs.
Who locked them? On what grounds?
The court ruled he overstepped his authority under the specific law he used, the IEPA. Said it wasn't meant for such broad duties.
Now, the administration is appealing, I assume.
Oh, definitely. But the ruling itself gave global markets a temporary lift today. It was seen as potentially reducing some of that trade tension.
Makes sense. Bit of breathing room, perhaps. And oil prices reacted.
They climbed, yeah. Logically, if trade tensions ease slightly, that's seen as less of a headwind for the global economy, supporting oil demand. Plus, OPEC Plus is meeting this Saturday to decide on output hikes, possibly accelerating them.
Okay, so trade tensions easing slightly in one area, but maybe not everywhere. What about China?
Tensions definitely remain there. The U.S. restricted sales of certain advanced chip design software to China, requires export licenses now, impacts tech firms.
And there was news about student visas, too?
Yes. The U.S. plans to, quote, aggressively revoke visas for Chinese students with links to the Communist Party or studying in critical fields. China called it discriminatory.
So tech and education becoming flashpoints. Amidst all this uncertainty, what are analysts recommending?
Well, Goldman Sachs came out recommending investors buy gold and oil as long-term hedges.
Why those two?
They see gold appealing partly due to concerns about U.S. institutional credibility, a safe haven, and oil as a hedge against potential supply shocks.
Interesting. So hedging against different kinds of risks there, it really feels like constant flux, doesn't it? Trade wars, central bank dilemmas, court rulings, geopolitical friction.
It really does. Things are shifting constantly.
So wrapping things up for today, if we had to pick the single most impactful piece of news affecting the broader markets, what would it be?
I think it has to be that U.S. trade court decision blocking the blanket tariffs.
You think so? Even though it's being appealed?
Yes, because it directly challenges the president's power on such a major economic lever. It introduces a significant legal uncertainty around those tariffs that have been hanging over the global economy. It offers potentially a temporary path away from escalating tensions, even if it's just a pause. It definitely moved markets today.
Okay, a potential crack in the tariff wall, highlighting that intersection of law and global economics. Well, that wraps up our deep dive for today's Malaysia Money Matters news. From mixed corporate results here at home, navigating those headwinds, to these major global political and economic shifts.
The interconnectedness is really clear, isn't it?
Absolutely. So as you consider your own financial strategies, think about how these developments, the global forces, the local company trends, might factor into your decisions.
And please, stay informed on these vital topics. Make sure you subscribe to the Malaysia Money Matters deep dives wherever you get your shows.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.